Right. Here we have one print. We bought a 23.60 call for volatility up and out of the money. They closed at $34.19, and the lows are 18.90, and that is us. And it's almost impossible to get hit in an index option. However, I will say it again, that buying down here is the right thing to do because we already have a 24.05 put. That's $106. And it's come up off of its lows. And we need to start building when the index is put in the bottom. That's why we got to build this side at the lows. We are the low print against our top dollar risk, but we still have to buy more. We still need another one of these to make the differences in the short-term markdown. So go ahead, watch how the markets. I would bid another contract in here and have another one. But you're $1 up from your entry from 1890. You were the last print, Corrine, so you're on this side of it. But we need another one on a pullback now that we know that we're putting the bottom in the market and it's time to start buying. It's time to start buying. We're 3 minutes away from that 60-minute bell, and we're starting to put in the markdowns on that call. We are going to hedge more on this side. We are going to hedge more so that if they walk this side down, so be it. At least we got something in play, or we sell this one and let this one run and pay for what we call scaling out management. There is a way to scale out if we do put a bottom in the market. And if you have this one to pay for that, scale out and maybe keep the other one, that way you're diversifying it closer to the risk factor of having more here. So you're making money here and you're making money here. So you're making money on Nasdaq. And you can understand by bottoms being put in on a Friday the 13th on a weekly level that you finally got this side of the market marked down and you made your entry. Congratulations for that. You hear me? Now we have to congratulate ourselves on risk management too, don't we? Because we're always trying to balance the risk. You were? At what price? Okay. Well, you got $1 profit going in your way, don't you? I would always take it. Go take a look and see if we're holding that delta and see where we're at. We're bouncing in all of the indexes now. So, no, if you're bouncing, let's have you an order out there at something like, so they were $7, $2.50, $3.90. We would say $4.30. And let's see if we can break above $4. But you're not going to see it if you're not breaking out. If you're going mathematically in the right direction, you'll see it. Congratulations on this entry. We do need to make another call contract on this side of the market for short-term volatility risk management. We are now the low of the day, and we bought $15 down. And this is how we need to do it.